What's up, everybody? Today we're going to do something a little bit different. We're going to talk about the actual buying process. So stay tuned. I've got tips and tricks along the way. Let's get right on into it. What's up, everybody? It's Kristen Weller with the Emerald Group, and this is Life in Navarre. Now, today we're going to talk about the buying process. I still get a ton of questions, even from people that aren't first-time home buyers, about what to expect. So I figured we're going to try something a little different. We're not going to do a home tour. We're not going to talk about the market. We're going to talk about the process to see if it's something you guys like. So there's about 9-ish steps that we're going to talk about. So as you can see, I am in my car. I just dropped my son off at volleyball practice, and I was like, you know what? I just had a buyer's consult with a family, 2 generations that have never purchased a home, and I'm still getting some of the same questions, even from people that aren't first-time home buyers. So I figured, what better way to kind of go over the process than doing it this way? And if you guys don't like it, put it in the comments and I'll go back to home tours. But here we go. So step 1 is to find an agent. Interview different agents. Ask your family and friends for, names of people that they enjoyed working with, that they trusted, that they liked working with. Ask your colleagues, ask your, put it on Facebook, see if anybody, on your personal page. Don't go into groups because you'll have 52 million comments. So just on your personal page, ask, hey, do you know an agent in Navarre that you loved working with? Or do you have an agent in Gulf Breeze that you loved working with? Whatever. But this buying process video really kind of, and as a general whole, goes for any place in the United States. Obviously, some places have different nuances, but in general, this works for everything. So anyway, ask your friends and family, go online and Google review, Google search and look at reviews, find their Facebook pages, find their Instagram, find their websites, look them up, see if you like them, and then interview them. You don't have to go with the first one that you go with or that you find. So step 1, find an agent. Step 2, which is equally as important, get pre-approved. Not pre-qualified, pre-approved. Now, some banks are only doing pre-approvals, which is amazing. I love that. I'm seeing it just recently where they're only doing pre-approvals. But the difference between the two, so a pre-qualification is when you're calling up the lender and you say, hey, I want to purchase a house, and they go, cool, how much do you make? How much are your debts? Here's some money, in a sense. Whereas a pre-approval, you are submitting your pay stubs, you're submitting some tax documents. They're doing a hard credit check, not just a soft one. They're looking more into things so that the lender knows for sure how much you can qualify for. So that's kind of the difference there. So get your pre-approval. Now, since you already did step 1 and you hired an agent, ask that agent who they trust as lenders. They're going to know good lenders that are local to you, that know your market. They're going to know ones that are, get things done quickly, get things done efficiently, and keep the agent in communication as well. So step 2 is get pre-approved. All right, step 3, your agent should do what I call a buyer's consultation. So basically what happens through a buyer's consultation is kind of what I'm talking to you guys about. Going through the process, giving you timelines, giving you cost estimates of things, just holding your hand throughout the process and letting you know what to expect. If your agent doesn't do that, hopefully you haven't signed anything yet, but if they don't do that, find somebody that does, because in my opinion, even if you're looking at, a $50,000 lot, or if you're looking at a $5 million home, it doesn't matter. You should still be going through that process, even if you've purchased homes before, because things can change over time. And if you've purchased something somewhere else and not in Florida or not in Illinois or not in California or whatever, and you're doing that now, it could be completely different. There could be some nuances where you don't know. I know it was either North or South Carolina, you pay, what's it called? It's not an earnest money deposit, but it is a big chunk of money and it goes straight to the seller. That's weird to me. I've never heard of that, but that happens. Your due diligence money, that's what it's called. So things like that are things you will only know if you've purchased in that state, and you will only know to expect it if you've purchased in that state or if your agent talks to you about it. So step 3 is to do that buyer's consult, learn the process, And in that consult, what I do is we look at what your wants and needs are in a home, what your budget, what you're comfortable in, not just what you're pre-approved for, but what you're comfortable in. Because I've had it a couple of times where I'll have a family that'll be approved for $500,000, but they really want to stay in $450,000. So if I hadn't asked that question, I would be showing them things at $500,000 and they'd be like, no, no, no. So you need to know what your budget is that you're working with, or you need to let your agent know what they're working with. So going through that wants and needs lists and then looking at homes in the market together. So that's step 3. All right, step 4 is the fun part. We found our house. We looked at homes together. We went on home tours. We found the house that we want. So step 4 is writing that offer. Now, different states have different contracts. So I can only speak to Florida. It is written in legalese. However, our contract is relatively easy to read, but there are definite timelines in there. There are definite things that you need to know what you're asking of from the seller and what you're agreeing to as a buyer. We have 2 different contracts. Actually, we've got 2 different contracts, but then we have 2 different contracts of those contracts, one that asks for repairs and one that doesn't. The 2 different contracts, one goes by calendar days, one just goes by business days. So those are all things that you need to know. Your agent should help you keep track of those days, but there's still things that you guys need to know in there. So when you write that offer, you need to know how much you're spending. So your asking price, your offer price really, but also know what your closing costs are, and then know all of the little details in between. So step 5 is writing that offer. During step 5, your agent should be running comps to make sure that it's not listed too high or too low. Sometimes if it's listed too low, they could be fishing for multiple offers, or they're just trying to get rid of it. But knowing if you've got equity going into it, maybe you can ask for more things and offer a little bit more, that kind of stuff, whatever. But if your agent's good, they will do a comp, they will run comps or run, to make sure that the house is priced what it should be for the market, so that you're not overpaying. Because then if you are, possibly when it comes time for appraisal, we'll get to that in a minute, it might not appraise. All right, step 5. Our offer was accepted. We are under contract. Everybody has signed everything. We call it a meeting of the minds. So everybody's in agreement with everything. This is where the fun part starts. And this is where your timelines begin. So again, if your agent was good and you did your due diligence in researching and asking questions and interviewing, then your agent will keep up to date with all of your timelines. But this is the fun part. So in Florida for us, this is when we will get inspections done. We'll submit our earnest money deposit, which is that good faith deposit that you will buy this house and you'll follow through with the contract. So for us in Florida, if you walk away from the contract for a reason that's not supported, so let's say you get cold feet, let's say if you're military that your orders don't follow through, that is actually not a reason to be able to walk away from a contract, unfortunately. But let's say you found another home that you liked and you want to walk away from this one. Your seller can now take that earnest money. There's also some other things that could happen, but in a very general explanation, I guess I could say, that EMD, your earnest money deposit, is now the seller's. Now, if you walk away from the contract because you don't get qualified for your loan within your contingency period, your financing period, or if you have a right to inspect and cancel, and within those days, you say you don't want to follow through with the purchase of the home, then those instances you would get your money back. But following through those timelines once you're under contract is a big deal. So your earnest money's due. You're going to get your inspections done. The lender is now going to do all of their little bits and pieces where they're dotting their I's and crossing their T's, getting the appraisal done, going through underwriting, all that fun stuff. If they haven't already pulled a hard credit check, they're going to do that now. And then they're going to ask you for your life's work in finance, all of your pay stubs, all of your bank statements, explanations on things that they don't know what's going on, why you moved big money or why maybe you received a lot of money, all that good stuff. In Florida, we close at a title agency, or at least a title company is usually the one that, or a lawyer's office, but typically title. They're the ones that are putting together all of the closing documents and things, but they're going to make sure that there's no liens on the property. They're going to make sure that only the sellers can sell the property, so that they're only the ones that own the home. They're going to make sure that all of the taxes are paid, utilities are paid. They're going to get They might not get your survey for you, but once they get it, they'll look it over to make sure there's no weird easements or that the fences aren't on weird lines, things like that. So everybody's doing all of their things all at the same time. So it's a lot happening, but there are a couple points in time where there's a big lull. Usually a big chunk of stuff happens right at the beginning and a big chunk of stuff happens right at the end. If you're in like a 30-day period, in that middle couple weeks, it seems like nothing's happening, but everybody's doing their thing. All right, so now let's talk about, I guess we're kind of on number 6, but I kind of grouped a couple of them together. But anyway, is your home inspection. So in Florida, if you're a VA or an FHA loan, you are required to have what's called a WDO inspection, which is wood destroying organisms. So think wood rot, so like by water, pests, termites, any kind of rodent infestation, things like that. So typically we see these things like the wood rot stuff around window frames, door frames, the garage frame, that kind of thing, on pillars that are exposed to water. But there's going to be an inspector that comes out there and they're going to look for all of that stuff. We need clear reports, which means no signs of damage for those two types of loans. With conventional, you are not required to have any inspections. But obviously for me, if I'm your agent, I'm going to highly recommend getting a WDO and a conventional or inspection, no matter what your loan type is, especially if it is a pre-loved home, because you never know if someone took care of it or not. And the only way to do that is to have a licensed professional look through the home with the they're searching through everything. They're searching through, electrical, plumbing, the structure of the home, everything. And they have all these kinds of tools and technology that they can look to see if things are wet and make sure, the air is blowing cold or hot, whether they have the AC on or the heat on, those kind of things. So those are all things that we want a professional to do, and just to make sure that we are purchasing something that's, in good shape. There's also a couple other inspections. One is called a 4-point inspection. Generally, we don't do these unless the home is older, and it's basically going over the age of the systems as well as what kind of systems. So what kind of plumbing, what kind of electrical. And then there's another inspection called a wind mitigation. That is on the roof and then on basically any kind of hurricane protection that the house may or may not have. But that inspection is very handy to get extra discounts on your insurance. And then the home inspection itself. So those 4 inspections can be quite costly, especially if you're having to do all 4. But at minimum, your home inspection, your general home inspection, and then that WDO is what I always recommend to my clients, just because it's safekeeping. It is a chunk of money, but in the grand scheme of things, it could save you thousands on repairs that you didn't know the house needed. All right, number 7, I already kind of touched on it. It is your appraisal. Anytime you have a loan on the property, unless there is one catch, but anytime you have a loan on the property, you will have to have an appraisal. The catch is, or the one time that you don't need one, is if you're putting a big chunk of money down. Generally, I want to say it's 40%, where now your loan to value ratio is so low that the lender doesn't really care if it appraises where it's at or not, just because you've had so much equity already built into it. But 9 times out of 10, you're going to get that appraisal. Now, the appraisal is probably, you already guys know, but it's basically someone goes out to the property. They're just going to do like a really quick look through it just to make sure that it is a brick home. It does have a new roof, or at least it appears to have a new roof, that it has that fireplace that you talked about. It has a crystal chandelier in the bathroom, like whatever it is. But they want to know that the house is worth what you're asking the bank financially for. Now, for an FHA and a VA loan, those appraisers are a little bit different. They go out and they do what I call a mini inspection. Now, it is not an inspection. I mean, it kind of is, but it is not like a home inspection. These appraisers are specially trained for these types of loans because these loans require certain things. So for our VA loans, they want to make sure that there's a stove in the house. They want to make sure that the house is safe for our veterans, things like that. But in the grand scheme of things, for both loans, they want to make sure that there's no peeling paint. They want to make sure there's no vegetation on the house that could potentially get in the house. Some broken windows, that's another one, or any large holes. Anytime there's any holes going that you can see the outside in, or any drywall holes bigger than a quarter, I believe it is. Things like that, where it seems silly, but it is. They want to make sure that the house is safe. So there's a couple different things. So on those two types of loans, if an appraiser goes out there, they might have repairs that they're requesting to be made in order for it to fit the loan needs. So in general, your appraisal cost is about $650 and that is sometimes due, usually a lot more lately. It is due before closing. It is due when it is ordered. However, when you close on the property, sometimes they'll either reimburse you or they'll ask you if you want to use that towards your closing costs. So just kind of things to think about. But it is very important that we get that appraised at the value of the purchase price. Now, if it is not, it's called a tidewater. I don't know why it's called a tidewater. And apparently only in Florida it's called a tidewater from what I've heard from other people. But it basically just means the house didn't appraise. We as agents get a couple of days to fight it. We can submit more comps. We can say, hey, did you get the crystal chandelier that's in there? Did you get, here's the price of all of the things that this seller has put into the home. Can you use those as values, those kinds of things. So we're allowed to fight it. But at the end of the day, it's just it might come back down to negotiating between the buyer and the seller if it does not appraise. Okay, we already talked about what the lender is going to do for the appraisal. We already talked about what the title is doing, making sure everything is all, buttoned up there. So step 8 is final loan approval. So after the lender gets back the appraisal, gets back inspections, gets back, all of your paperwork that you turned in, now they're submitting it for final loan approval so that we get that clear to close email, because that's what we need before closing. Now, keep in mind, this whole time, once you're under contract, once you sign that contract, until the day after closing, do not make any big purchases. Do not give someone a big sum of money. Don't move money, period, in or out. Don't accept gifts of money, even if you're going to pay them back. Lenders don't want to see that. They've already approved you for how your financial picture looked on that first day that you asked to get approved. So any changes made, I always tell my people, don't do it. Ask your lender. If they're like, hey, I just got in a car accident, my car's totaled, I need to purchase a new car, I will tell them, I'm very sorry to hear that. I'm glad you're okay. Talk to your lender. If they say, hey, there's a sale on this furniture that I need for my new house, because, our old stuff is junk. Can I buy it? I don't know. Talk to your lender. Because again, any purchases, big or small, that are out of the ordinary from what you're normally doing could affect your approval. If you're just doing groceries, if you're just getting like regular gifts, that you would normally do, like regular spending habits, that's fine. But it's all those unusual or large purchases, always ask first, always. All right, we are down to number 9. Number 9 is closing day. So for me, if you are with me as a buyer, I do my final walkthrough as close to closing as possible, because the day that you sign your papers and the money is wired through, everything is funded, that house is yours. Let's say we close on a Wednesday, we did our walkthrough on Monday. Let's say on Tuesday, the water heater decides to burst open, but it happened after our walkthrough. When we went through our walkthrough, everything was great. On Tuesday, it busted open. On Wednesday, when you get your keys at closing and you go back to your house, and you walk in and there is water everywhere, unfortunately, that is now your mess. So I always like to do my walkthroughs right before closing so that we know we don't have those kind of issues. Now, the off chance that something happens in the 2 hours that you're at closing, yes, that's something that could definitely happen, but at least we knew it was fine 2 hours before. That is a very extreme circumstance, but doing a walkthrough in general is always a must for me, because I want to make sure that the sellers are completely moved out of the house, even if when I looked at it, it was vacant, because they still own that house. They can still do whatever they want to. Say they said, hey, my little brother needed a place to crash for a little while. He lived in there, for a week while he was on break or whatever from school, and now the refrigerator has rotting food, the bathroom's not cleaned, like who knows? But I'm just saying anything could happen, because that is still their property. Now, the maintenance part of it all, though, which is why I don't like doing my walkthrough until the day of, they're still required to keep things maintained. So let's say we got our inspection repair back and everything looked great. There was no leaky sinks, nothing like that. Well, within those 30 days of closing, let's say the sink started to leak. That is a maintenance issue. They're supposed to fix it as a seller. So those are kinds of things that, I mean, I will look at that for you if you're my buyer, but just kind of things to think about. Now, when you go to closing in Florida, you need 2 forms of identification. One at least having a picture on it. And then I always tell my buyers to wire their money, whatever that's due for closing, at least the day before, but I prefer at least 2 business days before. That way we know it's there. You don't have to worry about it. Chances of things changing financially are very small by that point in time. So I always tell my people, you're not getting your keys until it's funded, so you better put your money in beforehand so that you know when you close, you can get your money. Now, here is a pro tip. If you are the kind of people that want to read everything, every word, ask for your documents in advance. Let the title agent or your buyer's agent, or both really, know that you want to see your documents in advance so that you could read through things, so that you can put little tabs on things to ask questions about. If you read through them all at closing, it will take a good 6 to 7 hours. One of my very first clients that ever did that, I didn't expect it because he didn't really take too long to get my dot loop things back, just a regular contract. Granted, it's only a 13-page contract, but he didn't take very long to get those things back to me. So I didn't think he was going to sit there and read through everything. He did, which was fine. I'd rather him know what he's signing, even if it's word for word, and be comfortable with everything than not. But had I known that, we could have had everything sent to him prior, or he could have come in at an earlier day to kind of look through everything so that he would be better prepared. Now, the other part of it too is that title companies, they usually only have 1, maybe 2 conference rooms. So if we have someone that wants to see those documents and read through them, now we're taking up multiple spots that they have allotted for other closings or for other appointments, whatever. So that's the other reason too. But this way, at least you have, you can read them in the comfort of your own home, and then just make little notes on the side or little tabs or whatever. So let your agent know if you are going to read through everything. I love it when people do that, but just give us a heads up. Okay, so last couple things. Let's talk about timelines. In general, if we have 30 days, that is plenty of time for a normal closing. We can sometimes push it to 45 days, and sometimes we can even get it as close as 15 days. If we're trying to get something closed really quickly and it's a loan, we just have to make sure that we are on the same page as the lender, and we just talk to that lender first to say, hey, what is the absolute soonest you can get this done? And then also ask if there's going to be rush fees, because there's almost always rush fees. So just make sure that you make that very clear with your agent and with the lender so that everybody's on the same page. Now, if you need something a little bit longer than that, that's going to depend on the seller and how long they're willing to wait for closing. So kind of keep those things in mind. But on average, we only need 30 days. A lot of people don't realize that. So if you're thinking about, timeline of, hey, I'm in a lease that ends in, let's say, June. And if you want to time it all so that it all kind of coincides together, I really wouldn't recommend that too much, because then you're kind of, keeping stuff in let's take this way. Your lease ends June 1st. So let's close, end of May. You're going to have your contract end of April. You need to really start looking probably end of March if there's a lot on the market. If your market does not have a lot of inventory, you might want to start a little bit sooner than that. But that is just kind of like a general timeline there. Obviously, talk to your agent to see what the market is like, to see if there's a lot of inventory and you'll be able to find something quickly, or if maybe you're looking for something really specific. Talk to your agent to find out how often do these kind of properties come up, and base your timeline off of that. Okay, and finally, closing costs. Now, this is the big ticket number, right? So if your agent is good at what they do, they will give you a cost sheet. They will not rely on your lender's cost sheet, because your lender estimates sometimes too low, sometimes super high. So your agent's cost sheet should be pretty darn close to actual numbers, not only for a lender, but for title costs as well, for closing costs, actual closing costs for the title part of things is what I mean. So make sure you get a document from them. Kind of compare it to what your lender has, but for the most part, your agents should be the most accurate, surprisingly, at least at first, because lenders are always going to be super, super high on things. And when they estimate insurances, sometimes they're too low. If they estimate property taxes, I've seen them all over the place. So go off of what your agent gives you, because more than likely they've done this long enough to know what actual numbers look like. But as a general rule for your closing costs, you're looking at between 2 and 5% of your purchase price. In Florida, people tend to kind of get surprised as to how much closing costs are, but we don't have income tax, so we don't have those extra fees there. And what I tell people is the way the government gets you is when you buy a house. There are more fees, more taxes involved when you purchase a home. So, yay, we don't have income tax, but when you purchase a house, which generally only happens every 5 to 7 years, that's when the state is going to make up their money. Okay, so if you made it through this whole video, thank you so much. I hope this is going to at least be beneficial for somebody. Like I said, I tried something new. I wanted to see if you guys liked it. If you did, please comment down below. Say, yes, I want more of this, or say, what are you doing? Go back to your home tours. I'm good with either one. So I hope you have a great day. And as always, if you got something out of this, give me a thumbs up. And don't forget to hit subscribe so that you don't miss my next video that drops. See you guys soon.